All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Monday, May 6th. So we had, no doubt, we had some volatility in the overnight markets, just to kind of rehash, where we started in the beginning of the day. But obviously, unless you're living under a rock, there was, Trump tweeted out just to kind of start from where we were last night. But obviously, Trump tweeted out a couple things about putting back further tariffs, which caused market volatility. Really caused so gap down in futures in equity futures last night, and then obviously follow through once China opened down. It just kind of kept on going down and bled down through the rest of the session. The Shanghai finished down 5.8%. So probably a little bit of an overreaction. I will go through and kind of tell you what I said. I was on the Benzinga, what do they call it? Morning, is it pre-morning prep, I think is what they call it. But anyway, I was on their show, and some really nice comments from what they were saying. And I'll kind of just go over that, or rehash what I said this morning. But I mean, I always think that it's first of all, there's a couple things that we know from Trump, right? I mean, he seems to want a deal by Friday, so I think he's just trying to kind of reinforce the view that there'll be consequences if they can't get a deal done. So there was obviously a knee-jerk reaction to that because all along what we've heard is that the trade deal is progressing, it's progressing, it's progressing. So I think it was rightfully so for futures to go down, considering that information that we've gotten. But if you know the type of person he is, he wants to kind of push to try to get that deal and make sure that everyone knows that there's going to be consequences. So I can't tell you if there's going to be a deal or not, but I think the other thing that was, I thought, not confirmed, but there's a couple different commentators talking about how China's not going to come, and there was rumors of that. It helped today that they are still coming. It was announced at some point during the day, and maybe not everybody that was supposed to be coming, but at least they are still going to continue with those talks. But I really want to get in, besides this, which you could read about, in the Wall Street Journal or on in financial media. But really, what I want to get to is just the game plan, right? I mean, days like this. So there's a couple takeaways, right? I mean, as a trader. And again, I'm not giving out any advice or recommendations, but as a trader, you should always be learning. It seemed like there was a lot of panicking going on, like a lot of panicky traders last night. If you're in that boat, you should be using this as an example to possibly tone down your risk, either with short-term options. But it seemed like, and I get it. We haven't had a lot of volatility. The VIX for a while was at 12, 13, which is not the norm. If you're thinking that is what the norm is like, it's not. So, and if you're new to trading, that's fine. But that the norm of volatility is not supposed to be around the VIX around a 12 or 13, right? It's supposed to kind of be where it is now, which is a 16. So, and maybe even a little bit higher historically. So just keep that in mind. Things are not supposed to always be calm. That said, if you're worried and if you can't sleep at night and if you are, having mental problems, you have too much risk on, right? So that's an easy formula for you to understand, especially like, and I know because I'm always out saying this and I don't mind repeating it again, but short-term options, I know retail traders, for whatever reason, they get into these traps, and I don't know who is teaching them to take on all this risk with short-term option risk. Nobody does this. Like, institutional traders do not do that kind of thing. So, if you've gotten in yourself into that situation and you were okay, you made it out to the other side, just keep in mind these are not supposed. Short-term options are not supposed to really be held. Unless it's just a one-off trade where you're playing something overnight into the next day, but you're not really supposed to be holding short-term options for more than a day or two. And I'm talking about at this point May options. If you're holding weeklies, I don't know. Or even worse, like I've seen it worse. I've seen retail traders hold portfolios of short-term options. I have no idea who teaches people these things, but man, the amount of risk. So anyway, the reason why I bring this up is because I would rather, I want people to learn. So if you're doing these things and if you're worried about the market overnight, pare down some of your risk, or put on some puts for God's sakes. Put on a little bit of SPY puts. It's not going to hurt you, to partially hedge a portion of your portfolio. So anyway, these are all things that we go over in more detail in the trading room, just so that you shouldn't be that worried about the market going down. It is a little bit stressful when you see China go down, close to 6%. So just a couple other observations that I was talking about in the pre-market session at Benzinga was that it does seem like Trump right now does have a bargaining chip, because our markets, the U.S. markets, were not down nearly as much as China has. So when you're talking about tariffs and so forth, it is affecting them more. So just one of the takeaways that I realize is that he does have a little bit of a bargaining chip, because their markets are getting smashed when you talk about no trade deal and so forth. And the S&P, which I'll get into the charts, are only down 0.5%. But bottom line, here's my quick game plan. So did I buy the dip like crazy today? I mean, I bought selectively, and I have the same game plan. Whenever we see this volatility come in, it shouldn't be that different. Now, there's always different circumstances, but you should have a similar game plan, and that's kind of what I've developed over time. I never, go in with 2 feet, but I selectively buy things, because when this happens, right, in the market, and we gap down, where S&P was down going into the open, was down 2%, Nasdaq was down a little bit more. Everything gets hit, right? So not everything, in my opinion, has exposure to a trade war, right? Software companies, and again, if you don't, I'm not making this stuff up now. I went over all this in both in our pre-market session, which the Tribeca Trade Group pre-morning session, as well as in the Benzinga this morning. So I talked about Amazon, I talked about Salesforce, I talked about the difference between Amazon and Apple. I think Apple could be more trade sensitive if China decides to retaliate, because again, we still don't know what we're going to get for the week. But I think Amazon is less sensitive. Names like Salesforce, other even Zscaler, which did really well today. These are names that really don't or have. I don't want to say no. I don't want to say don't have any exposure, but they have less exposure than an industrial like Caterpillar or Deere or Boeing, for that matter, right? They're just it's a different animal. But regardless, everything gets hit on the open. So these are in my opinion, places to kind of go to, and we've kind of seen this play out a couple times. This is not the first time where tariffs have been enacted, and we've seen this. If you've been trading for the last couple years, you know that there's been certain names that outperform, and there's certain names that are going to get hit. Like the semis are going to get hit when you talk about trade tariffs, and I think they recovered pretty decently. But they were hit pretty hard. They still finished down 1.6%. They're more sensitive, right? But on the open, everything was down 2-3%. So in my opinion, that's buying opportunities. I'll show you, just so you know, I'm not just making this stuff up, but I already had a Salesforce position. I added to it. I also tried to take off. I had a couple like risk off positions like TLT. I also have HYG puts, but I did not get filled on that. So that's fine. I don't mind having a hedge on for a portion of my portfolio. I got into Vive as well. Another software play that I think is also less sensitive. Managed to take a target 20 minutes after the open with that one. But you could see I did not hesitate. This was at 9:33. I knew exactly what I wanted to do. So I have, again, same blueprint every time we have one of these sell-offs, and I will adapt it to whatever the reason is for the sell-off, and I'll find the ones that I think are unnecessarily getting hit. McDonald's was very strong today. That was a trade that we added on Friday. I added to J&J, which was also down. Like J&J I didn't add to this trade till almost an hour after the open, and you can see. I mean, why would J&J be down that much on trade? On tariffs? I don't know. But it just seemed like a nice buying opportunity. I'm having some issues with my PC. Let's see if I can bring up the 5 minute. I have too many applications open. I know it, but you could see it was down pretty decently. So there's certain things. Now the other thing that I know. Let me just go back to Slack, which I'm eagerly waiting the direct listing that they're going to be having. What else? LVS. I have the LVS up here so you could see. There was a lot of option activity today. The first hour it was quiet. There was just a couple things that were being bought, and then it really kind of picked up once we heard that. I think that China meeting is still on. People really started to buy. Las Vegas Sands was a real nice one, and I took that trade. I did my own trade here. I went into July 67 and a half calls. By the way, notice that we went into this way before all the call buyings. All this call buying was happening at 2 o'clock today. All of this, right, was all after 2 o'clock today. If you do your homework, you will find these trades before you see the option activity. The option activity for me is the icing on the cake, right? That's the momentum guys coming in. But notice this virgin point of control was taken out, right? That's what I want to see happen. There is another one down here, which we noticed too, but it was far enough away for me to take a shot. There was also this 1 hour one, which also kind of convinced me. Look at this perfect hammer touches that virgin point of control. So that was enough for me. Once I saw, I was like a virgin point of control being taken out on the 1 hour as well as the 5 minute. Done. And notice, and I even said that this might be when I put this trade on around 11 o'clock today, I said that this might be a day trade. But once I saw the call buying come in for January, I said, you know what? I think I took 1 or 2 targets in this trade, and I've got the balance on. Now it does have to get back above 67.08, so that's what I'll be watching tomorrow. But again, taking targets allows you to sleep at night. Someone asked me, which was a great question. They said, "Why are you taking a target right away on J&J?" Well, because I don't know what the market's going to do for the rest of the week, and I would rather have some profits in the hand, and then I could leave the rest of the trade on. I also added a trade on in STNE today. Just one of those names. This did not do anything today, by the way, since and that's just how it works. Sometimes some trades take off, sometimes other ones. But I have a really nice defined support where I could get out of if it doesn't work, so it won't be a big loser. Again, small losers are fine. Big losers, not good. This would be as long as there's no gap or anything like that. I can never say that 100% because I don't know. But under normal circumstances, I would get out if it breaks that green line. A few other trades that we did. I mentioned I took targets. I thought I took a second target. I did not. And then also another trade that I think is interesting. It's a starter position I took today because I think it still has some work to do. But CME, this I think is interesting because usually CME does better when volatility increases. Also, they have that new product out called the Micro Minis, which is a retail product. So somebody said that maybe it's because of this new Micro Minis that they have out. This for futures. Maybe it's kind of like when Bitcoin started futures. I completely disagree with that, and I'll tell you why. Again, it's good to explore these things. I'm not being critical of anybody, but the micro minis. These are small contracts. This is for retail, right? We know that institutions kind of control and whip around the market. Bitcoin was different because there was no way to short Bitcoin prior to those futures coming out by the SIBO and CME. Once those futures came out, it allowed investors to do something that they could not do before, which is short, and institutional investors. Coming out with a smaller futures contract for already where there's S&P, people are still going to, big institutional investors are still going to use E-minis and the regular futures contract. The micro minis are just something for retail to kind of kick around. So that's my view on that. Just to kind of look at, the other big story of the day was small caps. Small caps continue, they've got some strike now. That's 3 days in a row. They did finish up in the green. They finished up 10 basis points, but, that's a pretty significant comeback considering where they were last night. And I think even last night they were down well over 2%. So, notice virgin point of control being taken out as well in the overnight market. So, I think all in all, a great trading day, and If you bought, and again, I didn't jump in with 2 feet in the morning, but I had names that I wanted to buy, and then you could take those positions off. I think, and I said this before the market really got going. I said this around lunchtime today. I said there's still a lot of uncertainty for the week. Do I want to mess with a huge amount of short-term risk in options right now? No. But if this market will continue to give you the ability to get out of positions for nice profits. 30 or if you could make 30 or 40% on a trade, and sometimes even more, on a trade intraday, and you're not taking some of that position off, and you're thinking that you're going to get a double or triple. I think I talked about this on Friday as well. I think you just have to be reasonable with what targets you're taking. And the risk, right? If you can get into a trade in the beginning of the day, take two targets, and then leave the last third of the position or the last 25 position of the trade on to try to make a big winner. Like, I think that's what it's all about personally. And you could keep doing that, rinse and repeat, if we get a little bit more of this volatility present, with the VIX. Where did the VIX close today? In the 15 handle? But that's, I think, a better tactic than putting on a trade, not taking any targets, and trying to hit, huge winners. Just my opinion, again, of course. But you could see we got another one of these toppy looking. VIX was all the way above 18 at one point, so didn't close nearly as high as that. Another one that I like to look at is VVIX, which is the volatility of the VIX itself. That also still finished up 10%. A couple other things that I look at are VXN. I basically look at the VIX for the Qs and the VIX for IWM. This was a little bit more stubborn today. The VXN, this really didn't start to come down, till around 12 o'clock, and then kind of trailed off in the afternoon a little bit, but still did not come down that far. What else? I feel like there's so many other symbols and trades to go over, but there was some really good strength. Coop is another one. Look at the candle on Coop today. Unreal. I talked about Vive already, which we saw call buying on Friday. Talked about how you can get into some names that saw option activity towards the end of last week, but you can get in a little bit cheaper. So I think I'm going to end the video here, but you could see there was a lot of pickup of names. A couple of names that report after the close. I'll tell you, usually I ignore option flow the day of earnings because usually there's not much edge. A lot of times what they're doing is hedging exposure, but we saw some AIG calls that went up. I did not take them. I believe a couple of people did in the room today, and then SEDG also saw a little bit of calls this morning, and that's up nicely as well. I am long the solar ETF, which SETG is the second highest weight in that. All right, guys. So that's it. Wednesday. Don't forget we're having a member webinar. Any of these lines that are on my charts that I always refer to as value areas, as well as the VPOCs, we'll be having a member webinar where we're going to answer any of your questions. We'll go over from a very high level what value areas are, why I use them, why I think they're incredible support and resistance levels. So stay tuned. We're going to go over all of that. You do have to be a member to get that webinar, but should be exciting to go through. And I'll also have a special guest for the webinar. Thanks very much for watching. Have a great night. See you tomorrow.